What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. In this video, I will give you guys a complete update on the S&P 500 futures. Where did we open today and where's the market potentially going to open tomorrow? So right now, you guys can see that we're down about 13 basis points. So the market did gap down tonight. This again is the futures market that opens every day at 6 p.m. Eastern and it trades throughout the day. So this really indicates where the market is going to open tomorrow, which is the S&P 500 index. Now, before we get started, if you guys enjoy the video, please make sure to give it a thumbs up because it really helps out with the channel and recommends this video to other people who might be interested in watching. Also, subscribe and hit that notification bell so you don't miss out on any future videos related to the stock market, investing, and technical breakdowns. So if you've been watching any of my previous market updates, you have a really good understanding on where the S&P 500 futures has been and where are some of those key support and resistance levels. But if you're someone who's watching this video for the first time, let me give you a quick overview of where the S&P 500 has been and where I personally see the markets going this week. So this right here, you guys can see is Thursday of last week, and we had this huge sell-off in the market where the S&P 500 and Dow Jones both fell near 6%. If they had fallen over 7% on that day, we would have gone into a trading halt. That essentially means that trading is suspended for 15 minutes due to the increased volatility and the fact that the market just dropped over 7%. If that drop continues after the trading halt is lifted and the market drops over 13%, we go into a second trading halt for another 15 minutes, essentially letting everybody know to calm down and bring the volatility down to a point where we're not seeing such a significant sell-off in the market. When the second trading halt is lifted and if the market drops more than 20%, the trading is suspended altogether for that day due to the fact that the S&P 500 just dropped over 20% in a single day, and that is quite an aggressive sell-off. So this right here was a 6% drop on Thursday of last week. The futures market did gap up on Friday, but they were making lower highs and lower lows, as you guys can see right here. So this right here was a sign of weakness for the pattern. So the futures market opens Sunday at 6 p.m. Eastern, so they did gap down a little bit, but then this Friday's support and Thursday's low, which right here, was acting as an ongoing resistance for the futures. And Friday's low right around this level was acting as a good support before the S&P 500 broke below that support and it broke down. After so much consolidation that you guys see in the red area, then the market essentially rallied back up. So this right here was Monday, making higher highs and higher lows and pushing upwards. When the Fed came out with the news that they were going to start buying individual corporate bonds, along with the ETFs that have investment grade bonds and junk debt, that added to the market rally, which sent the markets even higher. And the S&P 500 and Dow Jones both were up yesterday. So now today the market did gap up, but in my opinion, there was some type of weakness due to the fact that we had already recognized Thursday's high as a clear resistance for the stock and Friday's high also as a clear support for the S&P 500. So these are the two trend lines that we had recognized. And if you move on to the pattern, so today the market did gap up quite a bit on just one piece of information, and that was the retail sales. The numbers came in at 17.7% up in the month of May against the expected forecast of about 8 to 9% that the analysts were forecasting, which essentially led the markets to gapping up about 1 to 1.5%. But if we look further into the pattern from today, we can see that there was so much consolidation within this red area that we've already recognized. The high point being Thursday's resistance, which we've already recognized at 3,126. The low point, which is going to be the support for the S&P 500 futures and the S&P 500 itself. So if you were to pull up the SPY, that's going to be the S&P 500 index ETF that tracks the S&P 500 index itself. So that's going to be right around this level at $310. So if we go back to the futures, which is going to be ES1 with an exclamation point, you guys can see how it's bounced off of these levels multiple times. And then today it did dip below that level for a brief 5 minutes, but then it reversed. Essentially that Friday's resistance holding as a new support for the S&P 500. So looking at it from a price action standpoint and the fact that S&P 500 was able to sustain those levels for so long throughout the trading session, even after gapping up close to about 1.5 to 2%, it ended the day just under 2%, shows me a sign of strength. Now, even though it is consolidating right now and it is trading between this range that we have recognized, and there is some form of indecision in the markets and there is no clear direction as to where the pattern wants to go, I was really impressed by the fact that even after gapping up close to 1 to 1.5%, we didn't sell off and we didn't see lower highs or lower lows as we did last Friday, when the market essentially gapped up, but it started selling off throughout the day and it was making lower highs and lower lows. Instead, today, we gapped up a decent amount on retail sales, but the pattern did hold its support from Friday, which was the resistance, which is now acting as a new ongoing support for the S&P 500. And those are some of the key levels that I want you guys to identify and understand. The first one is going to be 3,126, which is a very clear form of resistance for the stock coming in from last Thursday. Today's resistance, we're looking at 3,157. That's the resistance that the S&P 500 hit pre-market. So anything that you see on the left of the green line is going to be pre-market. Anything that you see in between the two green lines is going to be the actual trading hours, so the trading activity that happened during market open, and anything that you see on the right of the green line is after hours. So right now you guys can see that it's still pushing up and it's trying to break out of its most recent resistance, which is at 3,126. So when we talk about support levels, the S&P 500 did maintain its support from Friday's resistance, which again I've mentioned is acting as a new support, which is going to be around 3,079. So those are some of the key levels that I want you guys to understand and identify for yourself. So if you're able to break out of this level, we can potentially see a change in direction and the strength going for the bulls and essentially pushing the markets higher. The next resistance I see is going to be 3,157, which is going to be 1% away from the 3,126 level, which is also the resistance it hit pre-market today. So now if we get rejected right around this level and if we pull back down to its most recent support, which is also going to be Friday's resistance, which is now acting as a new ongoing support for the stock, we're looking at a 1 to 1.5% drop down to the 3,080 level. And then further down, I do see a support at the 3,000 level, which is going to be another 2 to 2.5% drop in the S&P 500 index. So I'm going to create an alert over 3127 and then another one over 3158, just so I get notified when the S&P 500 futures are hitting above that resistance level and they're breaking out some sort of resistance. I'm also going to create an alert below the support of 3,079, again, just so I get notified if the S&P 500 is breaking down from its low. So based on the technical patterns, in my opinion, there's a lot of uncertainty and indecision in the markets. We have no clear direction as to where it's going to go. The Fed is doing everything that they can to provide as much confidence and liquidity in the markets for it to stabilize and to decrease the volatility in the markets. But again, we understand that the stock market is quite disconnected with the real numbers and the real economy itself because of the fact that it's so forward-looking and it's foreseeing the next 12 to 18 months. In my next video, I want to do a complete in-depth analysis on some of those macroeconomic indicators. So I will show you guys the unemployment rate. We will also go over the personal savings rate. We'll go over the personal income. We'll also talk about consumer spending, the inflation rate, and then I'll dive into the money supply, which is the M2 indicator that essentially goes over how much liquidity there is currently in the markets. So just wanted to give you guys an update on where those key support and resistance levels are. I hope you guys enjoyed this video, and if you did, please make sure to give it a thumbs up. Subscribe to the channel if you haven't already. I really do appreciate you guys' support.